Good evening. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for Monday. And we are now at the 28th of February, 2022, and we start tomorrow, the first trading day of March. All right. So I'm not going to review everything that you already know about the invasion of Ukraine, the meeting that took place, the first attempt at a treaty, which failed, and the 17-mile-long column of now the convoy that is about to circle the head city and try to lay siege to it in some manner. The other thing I'm not going to mention is, at any point if Russia wants to turn its military loose, I'm talking the artillery, the missiles, and the planes, they can level these cities. But then what do you control? That becomes their issue. At the same time, they can go back and do something that was done in the Middle Ages, lay siege to these cities in short order. The problem is how much world pressure can they take, because this isn't like the medieval times where you're waiting, is there an army going to come from across Europe and it'll take a month to get there or 2 months to get there. So that's what you got to worry about. I think the world considers basically everything Putin's done, at least the Western world. They're wondering, what the heck is this all about? I think Putin's people at home, I hope they stand up to him. I know they're scared too, but they have to realize that they see it. Their stock market's closed. The ruble fell 30% against the US dollar. ATM lines are out the window. I mean, you can't even get there. Bitcoin is soaring. Why? Because you got to have your money. You can put it somewhere. How do you track that? That's one of the ways they're probably doing that. And their other necessities are being cut off. This is impacting the world because Germany's car production is falling off already. Japan has announced that this is creating a situation where they have to close some of the plants. Federal Reserve in the U.S. is going to address this. They have to in some manner and say, okay, what do? Raising interest rates at this time aggressively doesn't help the economy. Yet inflation, how can they stop it? An interest rate's not going to stop it if you don't have the goods. I'm just giving you the story, and it's difficult. So Wednesday, you want to tune into that. We get the Reserve Bank of Australia tonight. They're going to tell us their monetary policy. Bank of Canada is going to tell us what they're doing. Come Wednesday, we're going to get the non-farm payrolls numbers this week. So that's where we're at. Okay, as we take a look, and here's another thing before we get going. I'm doing XME. I want your opinion as to what you want me to cover starting tomorrow. From tomorrow, I'll cover through next Monday, and then I'll ask again for a new set. So give me what markets you'd like me to cover. I'll look them through. I make a decision based on nothing. To be honest, I look at what's the market doing, what might you like, and I move on that. So we'll be able to do that. There will be on Thursday at 12:30 p.m. a live webinar. I'm going to send out the invites tonight or tomorrow, probably in the morning. Once you get those invites from me, sign up. You only have 2 days to do it. They feel like that, and what a time to have one of these. So it'll be at 12:30 p.m. Central Time. I open the doors for it at 12:15. It is free. You bring your questions, send them to me ideally ahead of time. Let me build the charts, and we can go through 50 charts like that and have a ball with this. All right. For those of you that know what I've been talking about, one of the things I've stuck my neck out on TV everywhere, Australia, Canada, the U.S., I interviewed, I was asked, what do I like the most? And I said, I like the metals. I'm not talking gold. I like the copper market. I like all the metals that are used to build things. This is XME. You tell me this market isn't moving. I've been saying it over and over. The copper market, in this bad environment for it, it's still $4.50 a pound. Keep that in the back of your mind. Would I ever tell you, though, to buy over, I want to come back to that. This is a weekly chart. Would I ever tell you to buy over an upper Bollinger Band? If you're new to this, let me explain. I will never do that because you only stay over those numbers 5% of the time. Therefore, it's to the right-hand side that you want to do it. You're waiting for the break, but the trend is up. When you take a look at this chart, this is the highest high of the whole move in the face of all the invasion. Is it trending? Not in the sense that it's got a pattern for an uptrend of a higher high and a higher low. It's got a lower low and a higher high. That's not a true trend. The bias, I define bias this way. If the market is over the 18-day average of close, which is 18-day MAC, I have upside bias, which means I'm waiting for a buy signal out of this brown line called a swing line. The swing line attaches itself to the most recent bar, depending if you have a higher high, lower low, inside day, outside day, up or down. The formula is very consistent and it gives me the pattern. But when I have the bias up, because I'm over that, I'm never looking for a sell signal. The next thing I'm looking at, how are we lined up on other moving averages? And this is a very bullish situation. You have the 18 over the 100 in green, the 100 over the 200. That's a classic bullish moving average setup. But bells and whistles, take some profit. Here is what I would tell my client. Why? Whenever you hit a Bollinger Band, you generally, the first time you hit it, you get a back off. So you hit it, you ran it a little bit, you backed off. This is the first hit after a back off. Take a little money off the table is what I would tell my clients. My whole momentum, still bullish. Why? Because I have an embedded reading. What the market did is it came down on this day, February 24th, and you had readings that ended up under 79, which means traders had to come out of the market. If you take my enhanced Bollinger Band course, I tell you what happens if the very next day the market re-embeds with both numbers over 80. It did so, and here's the target. Take the course. It's on the website under the word education at www.iraepstein.com. In Apple, we were looking for this area, the area, to be a nibbling area. I said it to you back here. It occurred, and that's all I said. I'm not trying to give you buy here, sell that in this tape. What I said specific, I think the challenge of the 200-day average is going to hold, and I think these markets, you have to have two different sets of brain. Hi, I'm a trader. My name is Ari. Hi, my name is Ira. That's my name backwards and forwards. Okay, and Ira is an investor. So Ira, if you're buying there, what's your time frame? Oh, a couple of years. Ari, what are you doing? Oh, I wouldn't buy. The market's still under the 18-day average. Do you get the difference of the two? It's a Jekyll and Hyde, but you have to keep them separate. You can't mix your investment and your trade. I've seen traders try it, and ultimately, I've not seen it succeed. I think it ends up in a disaster. Unfortunately, what happens is a trade often turns into their investment because it didn't go their way, and they're forever nurturing a bad deal. Don't do that. If you entered as a trade and it didn't work, you get out and you move on to your next trade. Nobody's infallible. Traders lose. Traders win. They're traders. Got it? If you look at XLF, you hit the lower band. That was where the trade came out. The market was oversold. It's correcting itself. I think rallies here are still going to be met by short sales. But if you take out the highs of Friday, right here, this number at 39.20, it's probably a pathway to get back into the 18 and the 100-day average and the market then make a better decision. So I don't think the pros will let the market get over 39.20 if they want to be short. In Disney, you've had your break, you've come back, and now all of a sudden, for 4 days, you're just marrying yourself to the 18-day average of closes. I love Disney long term. People aren't going to be wearing masks. The kids want to go out again. Families are flush with cash from not having gone anywhere for 2 years. I think they're going to go, and I think it'll do just fine. XLI, any move now over 100.09, I think attracts new buyers in the morning. I wouldn't be surprised if their stop's under today's low and they're looking for this target. Doesn't mean it'll happen, and it's not a trade wreck. I'm just telling you what I'm saying. In XSD, the semiconductor, I think the short covering was done here, and I think you're just married into sideways action of going nowhere in the short term. The home builders, well, you know high interest rates are hurting them, but there's a but. It's spring coming. It's 55 in Chicago. We don't get dark until just before 6 o'clock now, not 4 o'clock anymore. There's people that are going to want to move come the spring and get themselves set up for the new homes and whatever they're doing. Life is going to change. So I don't think I want to be too bearish those markets. Even higher rates on mortgages aren't runaway numbers. The problem is the houses cost so much more because of the inflation and all the goods that you use to build one. Energy sector, look at how you're just whipping back and forth. You went to the lower Bollinger Band on Thursday. On Monday, you're at the upper band. I'm just looking for the whipsaws like that. Not the place to be. GLD, if we can take out this 175.79, I think you can fall back to regroup at the 18-day average of closes. Are we trending? No. You had an outside day down. You peaked out several times. You hit the Bollinger Band top, backed off. Hit it, tried to back off, backed off. Difficult market that lost its momentum. I know you're going to tell me you should all be long gold. I don't see it on that chart. Doesn't mean I'm right, but I don't see it. Same in the gold miners. I'm not seeing anything that I like on those charts. I'm not bearish. I just don't like it enough to want to own it. In copper, I like copper a lot. I like XME a lot. Does that look to you like on COPEX this is done bad? That's a new high for the whole move. So you may not agree with my plays on the metals, but you can't argue they're not working. TLT, you're going up, not down. Why? Because people are scared and the safe haven buying's taking place. You probably end this small rally with Fed Chair Powell speaking on Wednesday, so I'd be paying attention to that with what he says. He's got to be very coy in what he's going to do. In the dollar, I'd be careful at the upper Bollinger Band. Yes, I'm bullish, but I never teach a trader to get long over a Bollinger Band. I tell them to come out against the Bollinger Band. FXE, I tell them to come out of shorts against the Bollinger Band. Shorts. Yep. So you put it together, you try to come up with your game plan, and away you go. And I do this for you in the mornings in my Spider ETF video. Now, let me tell you, at 9 in the morning, I'm there and I'm recording. I get up at approximately 3:30 in the morning or so, and I start reading. And by the time I roll out of my bed, it's about 4:15, 4:30. I'm already up to date with what's going on. I'll go have my coffee, and then I head to my office, which is downstairs. And it's a beautiful office, I have to tell you. It's a full studio, neat place to work. I built it 2 years ago because I had a feeling this was going to happen. I'm really comfortable here. But that's when at 5:20, I start recording my first videos for my futures traders. Now, these are the paid subscriber videos, not for free. They want me to say, I want you to buy here. I want you to sell there. This is your stop. This is what you're doing. I do the same thing at 9 o'clock. I wait for the stock market to open. I want that first half hour of money to trade. You'll say, why not in futures? Because they trade 23 hours a day. They have been open since 5 o'clock on the first round. By 7, they're trading. The only ones not trading are the soft markets. They'll open 2, 3 in the morning in some of those, just the way they go. But those aren't the major markets. The S&P, the currencies, the metal markets, the grains, they're all rocking and rolling. So I wait for that first rush of money. Why? First of all, you get reports. Most of the economic data reports come up between 6:30 and 9 in the morning Central Time. I want to see them. I want to see the reaction to them. I want to be able to put them in a PowerPoint for you, start my morning video, and talk to you about what it is and what I think you should be doing up until 4 o'clock, or basically 3 o'clock for you in the stock market. Plenty of time to have a lot of fun with this. So if that sounds like something you want, just head to my website. It's all explained. It's under the word research. Can't miss it at www.iraepstein.com. I'll explain for you there, and I'll see you tomorrow. By the way, remember, I'm going to send out an invite if you've already gotten free offerings from me. I have your email address. That'll go out tomorrow. The chart room will begin, I like to call it that, at 12:15. I'll open it on Thursday, that's Central Time, and we begin promptly at 12:30. We're over 20 minutes later. I'm Ira Epstein. You have a good day.